Hello, I'm Russ Mould, AJ Bell's Investment Director, and welcome to Fundamentals, our regular look at the world of funds and collectives, where we highlight one of the most popular purchases on the AJ Bell Invest Centre platform, and then analyse why advisors and clients might be buying right now. This week, 8th on the list for actively run funds is Aberdeen Property Trust. With regard to the fund's mandate, well, the name's a bit of a dead giveaway. The £3.4 billion collective predominantly invests in UK commercial property assets. Its mandate is to deliver income growth for clients and do so in a manner that avoids taking unnecessary levels of risk. The portfolio is managed by a team that includes Jerry Ferguson and also this gentleman, Tim Sankey, who coincidentally spoke at the AJ Bell Investival event that took place in London on the 19th of November. When it comes to why advisors and clients may perhaps be looking toward this fund, well, I can think of three possible explanations. First, the Bank of England continues to drag its heels on this thorny issue of interest rate increases, which now might be off the agenda until 2016 or even 2017. So derisory returns on cash will continue to place a premium on reliable sources of income, and advisors and clients may view property as one of those. Second, other potential avenues for income, equities and bonds, well, they've generally had good runs and now seem to be encountering choppier conditions. 7 FTSE 100 constituents have cut their dividends this year to keep UK equity income fund managers very much on their toes. Meanwhile, fixed income has seen meagre yields just about offset minor capital losses as bond prices have come off the top. As I sit here, the 12-month yield on Aberdeen Property Trust is 1.9%, a figure which more than covers the 0.87% ongoing charge, and that, by the way, from Aberdeen Property Trust comes in 4 quarterly dividends. And thirdly and finally, besides income, this fund can in theory offer portfolio diversification. Ferguson and team focus as much on risk management as they do on return accumulation, something which may chime with advisors and clients as they watch stock and bond markets gyrate. The sale this year of assets in London and Manchester was designed to de-risk the portfolio and has left the fund with a 25% weighting toward cash and liquid securities, which come in the form of listed real estate investment trusts. This graphic here shows the portfolio's asset allocation as of the end of October. The fund managers certainly remember 2007-8, though probably not with much fondness, when some property club funds closed to redemptions. As such, they run a portfolio which keeps a sizable amount of ready liquidity in the knowledge that the underlying property assets are inherently illiquid and can't be sold at the drop of a hat. These guys don't and won't want to close or gate the fund. In terms of the actual property portfolio, retail represents the largest portion, followed by offices and industrial, as this graphic here shows. However, the fund managers focus on individual sites and buildings, so the portfolio is built bottom up, and those weightings are not the result of a top-down asset allocation plan. Ferguson and Company seek to select quality sites in the right areas with the right tenants, and they look to control risk by managing voids, lease length, the timing of renewals and development projects. Ultimately, the fund would probably look to generate returns of 6 to 7% a year over the very long term, with the bulk of that coming from income, rent, and the rest from capital gains, that final little portion. The fund dates back to 2004, but this final graphic refers to the B accumulation units dating back to 2010, since it's this class which features in the list of top 10 buys on the Invest Centre platform right now. Long-term income hunters may therefore feel comfortable here, albeit in the knowledge there is a distinct cycle to the UK property market, and the fund did show a sharp dip in value during the Great Financial Crisis. Thank you for watching, and I look forward to seeing you next time.